Sembcorp Marine, the marine arm of conglomerate Sembcorp Industries, has been in the red for the past 2 years. Debts have also been piling up, with net debt reaching the 4 billion Sing dollar mark at the end of last year. Then COVID-19 and falling oil prices hit. Oil majors cut their budgets and new orders began to slow or stopped altogether. The deal will involve a 5-for-1 rights issue and a subsequent share distribution that will see Sembcorp Industries and Sembmarine parting ways. Sembcorp Industries will subscribe for up to 1.5 billion Sing dollars of these rights shares. Following the rights issue, it intends to distribute its entire stake in Sembmarine to shareholders.
They now can focus on urban development as well as energy, or previously known as utilities. So hopefully the stock can re-rate and it's easier to value a company that is focused.
The rights issue will raise about 2.1 billion Sing dollars in gross proceeds. The $1.5 billion from Sembcorp Industries will go towards repaying a loan that the company extended to Sembmarine in 2019. The remaining $600 million will either come from Sembmarine's existing shareholders or from Temasek, who will sub-underwrite the rights issue and buy up any unsold shares. With the funds, Sembmarine's CEO, Wong Wing Sun, says that the firm will have the financial strength to ride through the prolonged industry downturn and prepare for recovery. Analysts agree.
It lessened a lot on their balance sheet stress. With that fresh funding, they can then focus on chasing of new contracts without the funding worries.
But in this current weak operating environment, it remains uncertain whether there will even be new contracts to bid for.
Even before the pandemic and collapse in oil prices, the order books for the yards have already been declining. And if you look at FY20 itself, the oil majors capex is expected to drop at least 20%.
To remain viable, Sembmarine will need to diversify from conventional rigs into other product offerings like renewables and gas solutions.
This will actually entail them not just to be very competitive in terms of their bid, but also to diversify into more highly sought after products such as LNG vessels. So for Sembcorp Marine as well as Keppel alike, both of them would have to increase their knowledge base as well as technological know-how to really compete effectively with the Korean yards in this kind of high-tech products.
In the renewables space, Sembmarine has been in the offshore wind farm sector since 2015. It already has offshore wind fabrication jobs in Taiwan and the UK on its books.
The renewables that Sembcorp or even Keppel are involved in, it's mainly offshore wind installation. We are referring to installing wind turbines offshore. It's quite a narrow market to replace the drop in oil and gas capex.
The recapitalization exercise will leave Temasek with close to a 30% stake in Sembmarine at the minimum. This is because Temasek is the largest shareholder of Sembcorp Industries, and it will get Sembmarine shares when Sembcorp distributes its entire stake in the firm to shareholders. Temasek's stake could go up to 58% if none of Sembmarine's existing shareholders take up the rights issue. With all this in mind, what are the options for Sembmarine shareholders?
Even if you don't do these rights, you will still need to undergo some form of capital raising. There is still a need for SMM to raise liquidity, be it a rights, and this will be the best option rather than increase their debt levels even further, which is already stretched.
More than 50% or a simple majority of minority shareholders must vote in favour of the proposed rights issue. A simple majority will also be needed for the whitewash resolution, which waives their rights to receive a mandatory takeover offer from Temasek. Under Singapore's takeover code, any entity which has 30% or more of the voting rights of a company will need to make a mandatory offer. If the deal goes through, existing Sembmarine shareholders will see their stakes being significantly diluted from 39% to 6.5% if they don't subscribe for the rights. But if they take up the rights offer, they will have to fork out more money just to maintain their stake. So it will be a dilemma for these investors. Some investors may not even want to make a decision on the rights offer, and market watchers caution that they could sell ahead of Sembmarine trading ex-rights. This is because the share price will have to drop to account for the new rights shares. The theoretical ex-rights price for Sembmarine is 0.29 Singapore cents based on the last 5-day volume-weighted average price, or VWAP. The developments around Sembcorp Marine have raised speculation, once again, of a merger of Sembmarine with Keppel's offshore and marine division. Last year, Temasek made a 4.1 billion Sing dollar offer to raise its stake in Keppel Corp to 51%, and the transaction is set to be completed before October this year.
If they don't merge, they also need to reduce their capacity quite drastically. If you just look at the all majors capex, since 2013, it has halved to the current levels. But if you look at the capacity or the balance sheet of Sembcorp Marine, it has almost doubled from 2013.
A merger makes sense in the current context, as it will allow the enlarged entity to pool their resources together while streamlining its operations to compete more effectively with Korean, Chinese, and Japanese yards, who themselves are all actively engaging in merger exercises over the past years to stay relevant.